Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday, which actually now should hopefully be aligned with UTC, unless I continue to be mistaken on that front. It's awesome to see so many people in the chat already. Hans, good morning, my friend. Moral, great to see you. Geo as well. Loads of people starting to flood in. Fantastic. Also, a big shout out to our friend Hans today, who for South Africa's incredible victory in the rugby. It was just a fantastic, fantastic tournament to watch, to be honest. Even as an England fan, it was. There were some very, very, very close fought games and matches in there. But I have to say, I've always had a big soft spot for South Africa. Had family lived over there for a long time, and were just such a rugby powerhouse back in my day. It's great to see them back to those kind of levels now. Craigie boy, good morning. Whack as well. Yeah, Hans, I'm surprised, to be honest, mate, that you're in any fit condition to come on the stream today. Definitely enjoy that. I know I got lots of South African friends, and I've seen some of the celebrations going off, which is just awesome. And what an amazing thing that means so much to such good people. And Craig, cheeky, very cheeky. So you were in South Africa, you absolute beaut. Do you know what? It's terrible, right? I really enjoyed Jamaica. It was amazing. No more so than the fact I was over there as best man for one of my best friend's weddings, which makes it infinitely special. But whenever I go to any country like that, I just always makes me think of South Africa, man. I miss Africa. Someone said to me when I first went there when I was like 6, 7 years old. I was very fortunate to travel there a lot in my life. And someone said to me once that once Africa gets in your blood, you never ever get rid of it. And I think that's so true. It's so true. But anyway, not digressing too much, awesome victory for the Springboks. And Hans, I'm huge congratulations to you for being in any kind of fit state to do anything today, mate. I think that's brilliant. Rafael, welcome, my friend. Simon as well. Yo, Crypto Bros. Yeah. Good to have you on here, guys. Welcome to the stream. So today, I wanted to kind of put the ball back in your court. I know we obviously try and focus on education on a Monday. I know there's a lot of very interesting things happening at the moment. Obviously, Bitcoin is having a nice run. We've got some all kinds popping off all over the place as well. We've got those kind of real world narrative coins as well. You know, look at what Link is doing, what TRB did. So there's lots and lots of narrative. Now, we normally save Wednesday to be a little bit more focused on alts. But what I would say is that I think we've had some really, really productive sessions recently. Yeah, a recovery drink, hair of the dog, as we say over here. I have no idea where that comes from, that saying. We get some ridiculous sayings over here, but it's I think you might need it, mate, to be honest. I think the people of South Africa will be enjoying and celebrating this one for a while, and rightly so. So I know last week we were looking kind of at premium discount, right? So the idea and the overlayment of finding these premium discount ranges in order to give us these high probability setups. So I don't know if it was really helpful kind of really drilling into that high time frame bias or how we're looking at these ranges or what we're looking in terms of dealing ranges. The idea really being that, you know, you want to be taking plays in terms from a high probability setup. So I don't know if it's that or if there's an area that you guys are struggling with more than anything, but please, if you're in the chat and there is something, whether it be your high time frame analysis, right, looking for key levels, how do you spot key levels, whether it's what to do when you get to the key levels, whether it's looking at executions when you're there as well, whether it's looking at triple screening your system and saying to yourself, okay, what type of trader are you? You know, are you a trader that would be, you know, that if you're looking to swing trade, then you want to do these on a higher time frame, right? Are you looking to day trade, in which case you're looking at medium time frame? So someone like me, for example, my real bread and butter is intraday trading, meaning that I'm typically using my daily chart here as my high time frame. Yeah. Then I'm dropping that down to an hourly chart to find my kind of arrays. And then from there, I'm then looking to execute in and around a 5-minute chart. I will sometimes drop that down a little bit lower. Okay, so spotting changes on a higher time frame. Okay, so Craig, in terms of that, mate, do you mean in terms of when we're looking to flip our bias, for example? So if we were to look at this chart now, because actually I think one of the things that's really interesting about this is that we've had this really, really big pump, right? So I released in my Bitcoin report last night that even though I'm really bullish at the moment, which I absolutely am, Yeah, very, very much bullish on Bitcoin and crypto and have been for quite a while. In fact, actually, just if we're going to look at this in terms of how we overlay, how we can use this, how we use these principles across all time frames, if we really kind of just zoom out to the weekly chart right here, and obviously we're just going to focus this on Bitcoin at the moment. Okay, mate, well, let me make a note of that because I think that's a really, really good subject. Um, so let's take a look at that today, shall we? So let's look at our bias, yeah, and high time frame changes. Yeah, and then how we kind of decant that down. Now, I'm going to base this very much on the kind of system that I trade, which is going to be our daily, our 1 hour, and then a 5 minute execution, right? So I'm going to give you some examples based on that. However, I know a lot of people on here are going to be looking at swing trading mechanisms. So we can always zoom out a little bit more, for example, using a weekly to a daily to an hourly. So let me just give you a quick example of that, right? So my rules are really, really simple. So for those of you that are new to the stream, I was a student of ICT many, many years ago, who has been a huge, huge part of my trading journey. Also Trader SC, who's taught me a hell of a lot, as well as other people, Crypto Burb, who, I'm fortunate enough to work alongside these days. And, the list could go on. But what I would say is one of the biggest things in trading, if you want to look at becoming successful or consistent, is that you have to understand what type of trader you are. And that comes down to a couple of things. It comes down to the type of trader you want to be. So what appeals to you? People that have great patience, people that have more of a modicum of calm about them tend to make very good position and swing traders. Someone like me that's a little bit, ADD or maybe a little bit bipolar or something, for me, holding those longer time period trades can be quite painful sometimes, right? So day trading really suits me because I can get in and out of positions quickly and I don't have to hold these things very often overnight. Which just helps me sleep a little bit better. You hear a lot of people talk about being these cold ice machines that approach the markets, and none of the best traders in the world I've ever met are like that. People understand their flaws, people understand their strengths, and then it's about playing to those. So with that in mind, let me show you a really, really quick example. So my everything that I base my trading on, a lot of it is just price action based, right? So a lot of these theories are ones that I've studied under ICT. So, like I always say, it's always very important to give credit to the people for the origins of the creators in this. Not many people doing original things in trading, to be honest with you. Most of them have been learned from other people. So, always good to go and study their original content as well, right? So, let's just squiggle some bits and pieces on here for you and show you what I'm going on about, right? So, for me, my theory is quite simple, right? Now, price is either coming to look for liquidity above an old high or below an old low. Yeah. Yakuza Kana, my friend. Great to have you here, buddy. Hope you've been keeping well. So, the rules and how we want to look at this are quite simple, right? Price is heading from external to internal liquidity, right? So, what do I mean by that? Well, what we mean by that is that external liquidity is a swing high or a swing low. Yeah. Now, when price has done that, when price engages with that, and I know this is a weekly chart, but price is fractal, right? So this can apply across different levels. So here we can see we run this low. Yeah. So let me extend this across here so it's really super clear, right? We can see that we've run this low. Now, why do we expect to see a reaction at this low? Because of the liquidity sitting under here. Yeah. So liquidity is resting here. Now, if we look back, let's just look at this for a moment as well. We have these equal highs here. We also have this high here as well. So in all of these examples, yeah, when we run a high or a low, which is our external liquidity, our expectation then is for price to seek internal liquidity, which are our fair value gaps, right? So what do I mean by that? So price runs this high here, yeah? And this isn't cherry picking. We can do this on any chart. And I'd recommend, if this is of interest for you, that you go away and you test this like obsessively. All right. Absolutely obsessively. So we're just going to focus on these couple of examples here, right? So external liquidity, right? And let me actually just draw this on here for you guys. Yeah. Here we go. Okay. It's external liquidity. Why is it external liquidity? Because it's an old high or an old low. Yeah. That's just meaning that when you see this, stands out. For me, the rules for highs and lows are very, very simple. For a swing low or a swing high, yeah, swing low should be flanked by two higher lows. Yeah. A swing high should be flanked by two lower highs. Yeah. So that's the prominence. Oh, is it lagging? That's a really, really good question here, actually. Is there any lag on the stream today, guys? Also, I don't know if that quality issue got fixed. Last week we had a bit of an issue with that, didn't we? In terms of it wouldn't crank up to 720 for some reason. Hopefully it will. Hopefully it will settle. If it does, I'll kind of go on. I'll try and go on a little bit slower and more methodical than my normal twitchy ways. All right. So, it's okay. It's okay. Quality. Thanks, mate. So, um, as we see here, right, we've taken out external liquidity. So when price was down here, yeah, we swept these lows. Price has then come and taken out this higher, right? Now, when we see this, yeah, your own trade. Yeah, sorry, Hans, I understand, mate. Yeah, no, actually, it has been a little bit recently. I think they've just done some major updates. So there's a few things changed the object tree and a few other bits and pieces. Often after that, you get this little period where it can just be a little bit annoying. Erica, hello, mate. Great to see you. So you haven't missed much. We're just talking about the difference between external liquidity and internal liquidity, right? So again, how looking for help in ways that we frame these trades, right? Now, this is our fair value gap. So let me just draw this on here, and I'm going to pop this in here as well for everybody. For anybody that maybe is new to the stream that doesn't know, FVG is for fair value gap. It's the gap that we get in this 3 candle pattern when we see this. Yeah. See how the wicks don't cross over? There's an imbalance there. Now, the market wants to rebalance these very, very often, right? So you see how important this has been here. So if this is our external liquidity, right, then this FVG here is our internal liquidity, right? So let's change that. Oh, or just delete the whole thing. Right. So is this making sense so far? So we're looking at how price is moving. Right? What's the catalyst for price? Where's it searching for? Where's it reaching for? That's what we're always asking ourselves, that first big question, right? So if price is reaching for and has taken external liquidity, our expectation is that price is then looking to draw down into internal liquidity and then to external again. Yeah? So external to internal to external, right? That just keeps happening, right? That's the repetition that we have. Yeah. So look, external liquidity taken, price rebalances, comes into here to internal. From internal, it then goes to external. Remember, this is our external liquidity here. Why? Because it's our swing higher. So from our swing high, we've now taken external liquidity again. Where are we reaching for? Internal liquidity in the form of a fair value gap. All right. And then that's what we're looking for. Internal, external to internal. Internal, where did it take external? Right here. Yeah. Then where did it go after to rebalance this fair value gap? Right? Oh, actually, I'm getting a new chair delivered today. That can wait. So into this fair value gap. Is this making sense, guys? Right? External liquidity is swept, looks to rebalance internal liquidity, then makes an attack on external liquidity, comes back down into internal liquidity again to take external liquidity, right? Now, in a situation like this is really interesting, right? Because price comes down into our internal liquidity. Our expectation here is actually for price to come down here and then make a move up to this external liquidity here, okay? Now, it doesn't do that, right? It fails and it breaks down. So then what are we saying to ourselves then? Okay, well, if this internal liquidity, yeah, has failed, then our expectation is that price is then going to seek external liquidity, which is down here. Yeah? So draw that back for a second. So now we've taken external liquidity. Yeah? So let's just put this line on here. So, and I'm going to do this in red, right? Because this is bearish, right? And why is it bearish? Well, first of all, we violated this PD array, making this an inverse fair value gap, right? Now, ultimately, we already ran external liquidity here, taking this out, right? But had price stopped short of that, our expectation would be for expansion to take out the liquidity resting here. So, with that in mind, the fact that we have our inverse fair value gap here, which we're now expecting to act as resistance, yeah? Can anybody tell me where our next internal liquidity is? So remember, internal liquidity are our fair value gaps. We expect price to come down to here to reprice, yeah, to rebalance, and then make a move on external liquidity, right? So can anybody tell me where? I know this is quite difficult, guys, doing this obviously without the ability to have you access the charts. But can anybody tell us where the next internal liquidity is resting? Yeah, so we've gone from taking out this high, price takes that out, rebalances this. Hopefully you guys can see that, by the way. That wick there is the one that just nips in, takes out the prior day's low into internal liquidity, expands to take external liquidity here. Yeah? Beautiful, right? So like Hans is saying here, right? So our next internal liquidity is the fair value gap, which is set right here around 28k, right? Just so that you know that here, yeah? So we've got the fair value gap here, which is a bearish fair value gap, right? Perfect. Yeah, like Hans said there, the new fair value gap that was formed. That's perfect, Julian. Absolutely spot on. Yeah. An auto cat. Okay, let's have a look at that. 30 to 32k. Aha. A note. So I see what you're on about up here. Right. Now that's our external liquidity, right? So let's just mark that up here as well. Oh, need to highlight that too. Yeah, so this is our next internal, right? So that's a really, really good spot there, guys, for those of you that saw that. And you're absolutely right about that level, but that's just our external liquidity, yeah? So the idea is, let me just draw a very, very quick diagram, right? Just because I'm probably not explaining this as well as I could be, right? So here we have a swing high form, yeah? So the idea of this structure is something like this, right? So these are our swing highs. These represent our external liquidity, right? Now I know that this can seem quite boring, guys, but it's one of those things that with trading that just isn't sexy, but it can just make such a huge, huge difference to how you can see that. Yeah, whole market saying, yeah, the huge bullish momentum in there at the moment. I was really hoping to see some kind of pullback, to be honest. But it doesn't look like we're going to get it. By the way, guys, if you ever see my charts, these are fair value gaps. They're grey on my charts, but for the sake, not for the sake, but for the purpose of this from an education perspective, then I make them green for bullish and red for bearish. Yeah, just so it helps people kind of stay in tune with those. So right, so try to draw this out in a way that we get a decent kind of schematic, right? So here we've set this high. Now what happens is, right, let's say we've taken out an old high over here. Price then moves from external. In fact, let me get that as well. Right, so the external liquidity is the high, yeah, above that. The internal liquidity is the fair value gap. So what we have here is price has swept this higher. It then wants to correct into here. So we're looking for our internal liquidity in the shape of a fair value gap. Our expectation is that price then comes up, right? And then attacks external liquidity here. So then when we're here, we look for the fair value gap that's in here. right? Which again is our internal liquidity. Now, when this fails, yeah, our expectation is that, okay, that hasn't supported price. See how we went from external to internal. Internal supports, reprices, goes back into a buy program seeking external liquidity. Now, our expectation here is for price to drop here and come back to attack this high, but it doesn't. This fails, right? This bullish fair value gap fails. When that fails, we close below it here. We then expect price to attack external liquidity, which is this low, right? Now what we've done is go into a sell program, right? Meaning that we're now looking here for the bearish fair value gap once we've taken external liquidity, which is here, yeah? Make a copy of that quickly. Yeah, external liquidity again, which is that low. That gets taken down here. Price comes up where we're expecting it to engage with internal liquidity, yeah? And then reach for our external liquidity down here. All right, so that's our little diagram, okay, guys? That's basically what we're looking at. When we now overlay this back onto the charts here, right, we can see quite clearly what's happened here. This is the external liquidity that's been taken, right? Let me extend that over to here. I'm just going to get rid of these for a minute, guys, just so that I can make the narrative a little bit cleaner. External liquidity is taken. We expect to draw into internal liquidity, which at the time is our bullish fair value gap. This fails, price goes beneath it. So our expectation now is for price to take out external liquidity. The fact that we've now closed below this bullish fair value gap means that it now becomes an inverse fair value gap, which should act as resistance. Okay. And then, as Julian said, rightly so here as well, and Hans got the level spot on, this is now our bearish fair value gap, which formed after the close of this candle, right? So what's our expectation here? That price is going to draw up as it did here and then seek external liquidity, right? And what we need to see here is I don't think that that is actually a swing low. I think they're level. So the expectation now is for price to reach down to here. However, what we can see is we got our rejection. Price came down, took out the prior day lows here, took liquidity, yeah? Now is drawing back up to where? Back to internal liquidity, right? However, we can see here that we didn't get the rejection. We would have got a nice day trade out of it, but ultimately price then closed above here. So when price violates this, it's then telling us that it's searching for external liquidity, which is this high, right? We've taken this one here, the local high. This, as this did, becomes our inverse fair value gap. So once we close above here, our expectation is for expansion up to this high. Okay, so does that make sense, guys? Has that just been an absolute load of convoluted nonsense, or do these factors here overlay each other in a way that makes sense? Yeah, because when we're going to look and we're just going to dive this onto a daily and then onto an hourly, a 5 minute, going to show you the fractal nature of price in terms of how we would be looking for these patterns. So many people struggle with how they can communicate this, okay, into actionable setups. So let's save all of this, shall we, in case we want to look back to it later. And we'll call that IM. Perfect, right? So I think some of the best way now to get on with this is to just do it on there. Crystal clear, 100% awesome. Right, okay, very useful. You're very welcome, Julian. So let's have a look. So GOT, if I understand correctly, you define the sell side external liquidity to be below the swing low that produced the high that took the buy side liquidity. So actually, Gio, what you can do, that's a good take on it. You can even simplify it more than that, right? But you're right. If we're looking at this as a perspective, and let's just keep it on the weekly, right? Swing low, right? So any swing low is external liquidity, right? So as soon as we take external liquidity, like we do here, the expectation is that price is then looking to rebalance internal liquidity, which is our fair value gap, right? Now, Obviously, and let me just do this in grey just quickly so we can get through them. Now, obviously, our expectation here as price draws in is to see a rejection here and see price draw back down, right? However, we don't get that. Price closes through, so we then look for the clear and obvious high, which is external liquidity here. And then our expectation is for this expansion here. Now we're dealing with current price action, yeah? And this is why I said exactly the same thing in my Bitcoin report, and I don't change my bias at all here. I think momentum, markets can get away from you, right? But for me here, right, what we've just done is we've taken sell-side liquidity, we've taken buy-side liquidity, right? What I want to see here is a retrace into here. And I'll show you then how we also overlay our premium and discount helps us do that, right? So while we've got this chart here, and let's just keep it on a weekly on a Bitcoin chart, or you're welcome to pick any time frame you want, and we'll try it on that as well, just so that we can show you. I don't like cherry picking things. I don't pre-prepare charts. I think it's much better to look at live and real-time data, because if you can't apply this over all different time frames, then you're not going to be any good if you're just kind of cherry picking the one or two occasions. This works really well. So let's just run this exercise really quickly, yeah? External liquidity taken here, right? So external liquidity is taken. Our expectation is for price to come in and then rebalance this fair value gap, right? Now, one of the really important things about this, where a lot of people kind of get this wrong, is we're using this chart here as bias, yeah? So what we'll do is we'll look at this chart on a weekly, a daily, and then an hourly for execution, right? And you can pick and choose whatever time frames you want after that as well, guys, and we'll try them on those too. So here, right? What's happened here? Prices come down, taken external liquidity, right? Now our expectation is that price is going to draw back, yeah, into internal liquidity, which is our fair value gap. So we've swept a low. Now, if we're expecting lower prices, which you have to be, why? Because we're in a sell program, lower lows and lower highs. How do we know that? Well, our bearish PD arrays, meaning that our bearish fair value gaps, order blocks, etc., are being respected. Yeah. So that bearish fair value, let me do this, sorry, in red again for you guys, right? That bearish fair value gap's being respected. Where do we expect price to target? Yeah. The next swing low, which is here, right? Does that get taken? Yes, it does. What happens when we take external liquidity there? We expect price to search for internal liquidity. That's this fair value gap, right? So we're still bearish, so we expect that to reprice and then take out the next swing low, which is this one here, right? That swing low then gets taken. We're then looking for the next, yeah? So if we haven't got a fair value gap here, what do we have? We have this up candle. This is our order block, right? We expect our up close candles, our order blocks, to defend price. See? Up close candle, defends price into the fair value gap, sells off. We've taken sell side liquidity here. We don't have a fair value gap in here. So what would we look to defend price here? We would look for price to reject within this, yeah? Within this order block. So bearish day here, bearish day here, bearish day here, right? Then what do? Here we have a change in delivery, right? Because we've taken out this low. So then our expectation is once again for price to draw higher into this order block. It then sells off low, right? Taking out this low, yeah? Because we hadn't tapped this yet, yeah? Remember this one from back here? So it's still external liquidity. We take that, then where do we expect price to rebalance? We expect price to head for internal liquidity, which is this here, right? Now, as we're using this, right, as a bias mechanism, we're not saying that every time it takes here, it's going to take out these lows. What you can do is when you jump into the charts, and I'll show you this as we move up because this is quite far back for the data sets, is that when price comes in here, we're not expecting it necessarily to even take these lows, as tempting as those equal lows are, right? We're just looking on a lower time frame, bearing in mind each of these candles is a week. So price has come down to set this. So our expectation now is for price to draw higher. So how would we have had success in that? Well, even though we're bullish, right, then our bias, our counter trend bias can still be in place because, right, sorry, we're bearish. We're bearish here, right? But it still means that we can look for where price is heading to. So for me, I'm actually bullish here because we've taken external, we've closed here, we've confirmed this fair value gap. My expectation is from this candle onwards for price to go higher. Now, how can I make that? So what do? Price comes down, sweeps liquidity in the form of the prior week's low. Yeah. Where's then our target? Prior week's high, right? So we'll look at this on the next side as well. Price takes the low, yeah. Bang, price takes the higher. Now, we're still expecting price to travel higher, right? So we expect price to pull back and then draw into this fair value gap deeper. Now, from here, however, for the continuation of our bearish trend, the expectation is that this is going to reject. But it doesn't, yeah? Price actually shows some strength, comes up and closes above this. Remember, like we said, this then becomes an inverse fair value gap, which we expect to offer support. So, what's our expectation? Price has taken external liquidity here in the form of this high. We're looking for internal liquidity, which is this fair value gap. I'm going to do this in green to show that it's bullish. What actually happens here is the momentum of price is really strong. So we might get an effect like we did today, yeah? Where price is just really, really bullish and it's just really hitting hard. No problem, right? No problem. We move to our next external target, and then our expectation again becomes for price to rebalance the fair value gap. Takes external, comes back for internal, yeah? And then from here, it not only attacks this external high, but this one over here as well. What happens then? We see a deeper correction back into this fair value gap, internal liquidity still, right? But because we're in here until we violate that, our expectation is still bullish, right? So we're still looking for progression. Does that make sense, guys? We're going to kind of drop this onto a lower time frame in a minute, and I'm going to show you these examples, yeah, and how we can kind of execute them. But I just want to make sure, first of all, that is nice and clear, yeah? And Hans, Craig, thank you, guys. Yeah, do hit the like button if you can, guys. If you are enjoying the content, don't feel compelled to if you're not. Helps with the algorithm, so people that are looking for this kind of content can just find it a bit easier. And obviously, helps with our likes and bits and pieces as well, which helps us get exposure. FR33 Will, a bit late today, but great to see you back on the stream, mate. Very, very good. SKL 10% up. Yeah, man, there's going to be some runners today. There's going to be some runners. What have we got? Link is just this unstoppable juggernaut at the moment. I think we'll have some outliers. ENS is up today, almost 4% as well. GMT, the game, so that's the StepN as well. That's up almost 6%. I think they've been launching on some news today as well. There's some definite outliers. Rune almost up 10% today as well, right? TRB again. See, this is the one I was talking about. Should we take a look at the Papa Legba? Love that name. Great to see you on here, mate. Yarko, great to see you, mate. Yeah, Rune 8% as well. Just a dad, my tea drinking brother. I am on the I'm on the green tea today, mate. After I was up just before London Open this morning, so I think I'd had about 4 cups of tea before about 7:15. So I'm on to the green stuff now, just to cut my milk intake a little bit. Really glad you're enjoying the stream, Papa Legba. Hope it's a lot of coins looking good for a short. Yeah, see, this is a really interesting point as well, right? We'll kind of try and bake this into the last kind of 20 minutes of the show, yeah? Do you want to say with Bitcoin, do you want to look at something? I mean, obviously the ones that are run really, really hot. Let me just load this page for you a second, right? Just so that you can see just what an absolute monster TRB has been. And actually, guys, I really don't shill the nest a lot, as you know. It's my trading community. It's between myself. It's Crypto Burbs, baby. He built this in 2017. We worked together as a collective of traders to help people train to become professional traders or train to become better investors, bits and pieces, right? Things like TRB, things like Link, and that our fundamental team were all over these in the big pumps. That's not what I do. I'm a price action trader, but these guys are exceptionally good at that. So if it is anything you're interested in, a couple of things I want to tell you today. One, in the description, we've got the link to our free trading congress. It's where we bring together some of the biggest names in the industry, from traditional markets, cryptocurrency, and trading, investing. We also host loads of webinars, right? So I think we did 40 live streams last time. We had about 12,500 visitors. We had some of the biggest names in the industry. There's giveaways. I think we gave away tens, if not more, hundreds of thousands worth of prizes and bits and pieces. So if that is something you're interested in, the link should be in the description. It's all completely free. Yeah. Yeah, good man. Thank you, Hans. Yeah, we don't. I don't like shilling stuff, right? Just introduce you to what we do. If it's something you want to be part of, then by all means, please do so. And if it's anything you've got any questions for, do let us know. So, with that aside, Yargo. No, it's a really good point, mate. Look, I had a few lower time frame nibbles at shorts, keep getting stopped out. Yeah, absolutely. So hopefully something like this could be of interest, right? But let's just look at the tribe chart, right? Now, let me just show you something here on the daily, right? And I think this will really kind of play into what we were talking about. Yeah. So when we're looking at this and we're overlaying the factors that we were just discussing, right? Then quite simply, when you're looking at these, external liquidity, price runs it, comes down into internal liquidity, which is this order block. Yeah. So we're looking at order blocks, right? So if we're bullish here, then we want to see the down closed candles support price. Yeah. So when do these become valid? Well, let's focus on this. We've got this beast of a high volume down candle here, just looking at the order blocks, right? Which I do in blue. Down close candle, right? We're bullish. Price closes above here. Yeah. Once it comes above here, it validates this as an order block, right? So we can see here, it keeps its potency as well. Now, we've not closed above this one here, right? We've not closed above these ones here yet. So this is our key point of interest. I'm not interested in these until we show some momentum above others, in which case, when we're looking down here, we say, okay, look, we've got this order block here. What happens? Price closes above it here, retests it here, then goes seeking external liquidity, right? Once again, this order block here, we don't expect price to come below here. We close above it here. Our expectation is for external liquidity to be hunted, right? Same as this one here. Often if you get a collective of two smaller ones together, I like to join them, close above it here, price doesn't return, right? So then when we're looking at this here, we can say the same thing, right? We're looking at that and saying like, okay, well, look, whenever you've got a cluster of order blocks like this, with they're next to each other, you really should, and even with this one, really, right, we should be making an allowance for that because they're adjoined, right? But you can see the point. It doesn't always have to be fair value gaps, although the market does love to rebalance fair value gaps, right? As we see in numerous occasions here, none more so than this one, right? Here's our bullish fair value gap. Price breaks away up into here, comes down to rebalance this, and then makes an attack on this high. Yeah. So that's what we're looking for, external to internal. So let's pop back to Bitcoin for a second, shall we? Because what I want to do is, Yargo brings up a really, really brilliant point here, having some nibbles at some shorts, keep getting stopped out. Now, one thing that I would say is, I know it's really, really tempting to short these big runs, right? And in my Bitcoin report, I was very, very open and transparent saying that I'd like to see a pullback here, right? Really, really inefficient moves like these, where you've got a lot of fair value gaps, we often see these retracements, right? So look at this, yeah? Big move down, everybody in the world wants to short, price comes back to internal liquidity before then attacking external liquidity, right? Look at this big move up here, right? If we try and get both of these on the page at the same time, yeah? So this here and then this here, yeah? This is what we have. We have our run on liquidity down here, yeah? Change of structure here. So let me just draw this into you. So we've taken external liquidity there, right? So our expectation now is for price to draw to internal liquidity in here, right? So, and this is where I want to introduce you guys as well to the concept of premium and discount, or not to introduce you to it, but to build out on what we were talking about, right? So what we're looking at here is this range from this high to this low, yeah? So let's just draw that in. Or actually, it would be to this low at the time before we got the corrective move, right? So from this high here to this low. Yeah. Can you guys see that okay? Is that clear enough? So it's a 50-50 split range. the concepts of premium and discount, right? So premium, yeah, and discount. So what do we want to do? We want to be sellers from premium, meaning that prices come into a premium. It's potentially overpriced, meaning it's going to look to sell off lower. Or we're down in discount, meaning we want to be a buyer at discount because we're getting the very best prices. So this is how we can help ourselves in terms of what we target, right? So when price came down to here and we set this, then when price is coming up, and why were we looking for price to react here? It's not just a magic box. So we've got this low here, this low here. So we have taken external liquidity here, right? Once we take external liquidity, let's do this quickly. Right, once we've taken external liquidity here, let me move that back one more. So boom, we take external liquidity, right? So now our expectation is for price to draw back into internal liquidity. But how do we know where to mark? Because you might get a smaller candle here and then a fair value gap, great. But our high probability short is going to want to be taken from up here, right? So what do we have up here? Yeah, as confirmation. Well, we want it to be in here. We've got this fair value gap and we've got this order block, right? So we draw in our order block. We draw in our fair value gap, which price has already returned to once, but that doesn't matter. It's still valid. Let me do that in red. So we stick with our theory. That's a red fair value gap. So see how we've overlaid this range. Yeah. Premium discount. So now we're saying if we expect price to rebalance and continue lower, price is going to do one of two things. We want to see it return to our order block or fair value gap that's up here. Yeah. In premium before it continues lower. Or we see price disrespect these, yeah, close above, in which case we then look to that to act as support and then move higher. So this then allows us, and we say, okay, well, we're in there. Price moves from internal to external. So what happened? Price moved up into our target, rejected at the order block. So it's gone from external to internal and now back to external. All right. So I hope that makes sense, guys. Let me delete this and then let's look at just a couple of quick examples. Because what I really, really want to iterate here is the importance of bias, right? So when we're talking about shorting, right, and these are really, really tricky conditions here, right, because you're getting these big runs, yeah? And quite often, as we all know in crypto, when this stuff runs really, really hot, it's very, very difficult to jump on board. So how do we get positions? We absolutely respect our bias, right? So let's run through this on BTC, right? And we're going to run from a daily to an hourly to a 5 minute, all right? Where we set our bias. So let's look at the point from which we go from bearish to bullish. Yeah? So let's just focus on this recent price action. So what happens at the point that we catalyze and go bullish? Yeah? Because here, what we can see is we take out a key high. Yeah? So that's our external liquidity. These thick red lines are always going to represent external liquidity, right? So once we take external liquidity, our expectation is for price to do what? To reach for internal liquidity. So we want to look at our dealing ranges. Now, a dealing range is simply when we take liquidity from the low and liquidity from the high, yeah? So I'll do this slightly different so we can see it. I'm going to do it like this, but we do it as dotted lines, yeah? So right here, we can see that price has taken liquidity from the lows. Yeah, it's come up to here, and this is where we're interested in trading it, right? So what we're going to do is we're going to say to ourselves from this point onwards here, we'll do it as a thinner line. That thin red line means that we're now looking for price to retrace. Yeah? Where to? What we do is we take this low. Why this low? Because that's the swing low that swept liquidity at the lows, and this is the swing high that's taken external liquidity from the highs, right? So we go from here to here, which is this high. See it here? Yeah. So just this range. Yeah. This is our dealing range from here to this high. So let's lock that. So once we've taken this high and we close this candle, our expectation is for price to draw down to here. Yeah. Does this make sense? So we've got discount and premium. Well, we're in premium here. We've run the external liquidity. Our expectation is for price to draw down and find internal liquidity, right? Which is this fair value gap. Why is that fair value gap important? Because from here we want to be sellers. So we're selling down until we get to this fair value gap. Once we reach this fair value gap, and we also want to be aware of this as well, which is our order block. We have gone from external liquidity to internal liquidity. Once we're here, we're looking to go long, right? With an overall bullish bias, because we can see here higher highs and higher lows. So whenever we're looking for the trend to follow, it's really, really important that we have this high time frame handle. So this is where the setup confirms. This is where we start to look for long setups. Yeah. So price comes in. Our expectation now is for price to come and attack this high. Yeah. But it doesn't. Price comes up here, takes this daily high, takes this daily high, and then it breaks down. Okay. So now the question for us is, okay, remember what we said before, external to internal, internal to external. Well, we failed to take external. Let's draw that in. Yeah, we failed to take external. So now we're breaking down. What's the expectation? That price is looking for external, but down here. So we set our range. We've had a lovely opportunity up here. So we've caught shorts down into here. This is where we target because that's our first fair value gap, right? Or our first order block that's in discount, meaning that we're now favoring long setups again because we're down in discount. Now, while we're back up here, we're favoring short setups. Yeah. Why? Because we failed here. We've taken this daily high. We failed to take external liquidity. Yeah. So now we're saying, okay, well, price has gone back into a sell program. It's searching for liquidity deeper. And ultimately, the liquidity that it's searching for, resting below that low, right? So once we've taken out this low, now bearing in mind we're inside this bullish order block here. So ultimately, remember our high time frame bias is bullish. All we need to do now. Ryan, welcome, mate. Very much. Yeah, absolutely. Let me run over it again in a second for you guys, right? I'll drag that old diagram back up as well and just run through it quickly. So as we come up to here, we're in the red box, yeah? So this is premium, meaning that we're favoring shorts, and this is discount, just purely from our dealing range here. So price has failed here and it's come back down, and it has attacked liquidity resting down here, right? Now, remember, we've taken liquidity on the sell side here. So let's draw in where our expectation is that price is going to draw towards our bearish fair value gap. Yeah. So what have we got here? Price has drawn down. We've set this fair value gap, right? Now our expectation is that price is going to draw higher, yeah, and interact with what? Our fair value gap here, right? Before selling off. Now, ultimately, what happens here is price is actually supported down here in discount where we're favoring long setups. Yeah. So what this stops us doing is it stops us shorting here. We actually want to see how this price action develops. Yeah. So then as we move to lower timeframes to find these setups, and I'm just going to show this to you very quickly here, actually. I'm going to move this onto an hourly and just show you how all of this actually starts to look. For those of you that aren't aware, the lines on my chart here are session breaks. So let me just turn them off for you for a second. All they do is they just denote the different trading days, because there we can make a look to see what liquidity we have resting behind prior day's highs and prior day's lows. Yeah, but just to keep it clean. Now, remember what we said. Yeah, so we are looking to be sellers in the red box, yeah, and buyers in the green box. That's the basics of it. But once we overlay our higher time frame bias, what we're saying is, well, look, actually, all we're expecting here is a correction down to here. From here, we're then expecting an expansion higher. Okay, but quite simply, if we look at this, and it depends what type of time frame trader you are, but let's look at our first example, which is here. So this big red line that comes across was our high time frame liquidity sweep, yeah? So what we're saying is our expectation here is for price to break down and reach into here, into our green box to find support. Then when we're in the green box, we're looking for market structure breaks. So let's just draw up a few of these structure breaks quickly, even on a 1 hour, yeah? So what we want to see are a couple of things. And let's just do this in a different color so it really stands out. Can you guys see that tealy kind of color? Yeah? If that's not clear, let me know and I'll change it, guys. But we sweep a high, we take out a low with displacement, meaning we leave a fair value gap, yeah? And then we're looking to sell, right, down to clear targets below. Now we're down here, yeah? Let me just zoom in a little bit. Make sure I've got this locked actually, or that's going to move all over the place. Yep. So what happens? We're now down in our green box. Remember, we're finding support in our green FVG and also our blue order block. Yeah. So what we're looking for down here is a sweep. Actually, that's a terrible color for that, isn't it? Let me just do it in black actually. Yeah. So we've had a sweep. Then we're looking for a shift in structure, right? Which we can pick any of these highs really, but let's just say this one. What do we need? We want to see displacement. Remember, like this one, a breakdown showing high volume, big body candles, yeah, that leave either fair value gaps or an order block. What do we have here? Can everyone see that? When we shift structure here, we got all these lovely fair value gaps in here. We retrace into them to go higher. Now, we don't change our principles on any of this, right? We are just saying the same thing, right? Now, we just overlay the same thing. So as we come into here, right, price sweeps a low, breaks out from a high, we're buyers in here, and where do we target? We don't just go and target the prior high. Remember what we said about dealing ranges, yeah? This is taking liquidity from the high, this is taking liquidity from the low. So if we draw this in, and extend it down to our new low down here, this becomes our 1 hour dealing range, yeah? So when we've swept liquidity from here, what becomes our target? Well, our order block or a fair value gap that's up in premium. Yeah, so in this case, we've got a nice clear order block. What it allows me to do is get involved in a trade here, right? So for example, I'd be looking at this, I'd be taking the FVG here. This is again where you can overlay premium and discount. Yeah. So this is the fair value gap here, right? That's down in premium, right? So down in discount, sorry, along with the order block. You can pick whichever one you prefer. I do like entering on fair value gaps. So I'm going to do this green just to depict the fact that it's our FVG, meaning that we have the expansion here, price returns here, which is where our entry is. Our stop loss goes below this swing low, yeah? And our target is this order block, which is here, the start of this, which is up in discount, yeah? Does that make sense, guys? How we're just decanting what we do on the higher time frames down to a lower time frame, right? So let's look at another example. Let's pick this as a failure, right? So what happens here, right? We get a swing fail, taken out key liquidity below. Remember what we said, yeah? We're looking for that to be taken out. We've taken external liquidity. Where's our internal liquidity? In the form of this bearish fair value gap, right? So we've taken external, price has drawn up into internal. We're then looking for price to attack this low, yeah? Now, ultimately though, what we're really looking for here is what happens and what catalyzes after this move, yeah? So as we're now down here in the green area, we're also holding the very bottom of this order block. We have to favor our long setups, right? So what do we need to do? We need a reason as to why we want to favor that setup. We need price action to show us something, right? See this, how constructed this is? It's just not very clean, is it? So what we want to look for is when our bearish order blocks, our bearish fair value gaps, stop getting respected. And the prime example of that one here is this one, right? This red one. Let me just delete this quickly just so that this looks a little bit cleaner, right? So we're down in a bullish order block on a daily scale, right? Don't forget your high time frame bias. We're in discount, yeah? So we're favoring long setups. Now what we're saying to ourselves is we want to show some patience. This is all very choppy price action, right? See how balanced it is? You're not really getting these big aggressive breakaway movements until you get this one here, right? But at the end of the day, it's still being contained by this bearish fair value gap. Now, we close above it here. So here I'm a buyer. Yeah, I'm looking for price to come back down. Where to? I want to see price come back down, remember, into our bullish order block, which is our down close candle. I want to see a bullish order block, or I want to see a fair value gap, right? Now, at the moment, we have the bullish order block there. Like I said, you can always add an extra element to this by adding your premium discount range as well. Let me just... Actually, what I'll do is... Just trying to think if I can just make this a little bit bolder for you guys quickly. Yeah. Let's just amp this up a little bit. I just want to make sure it just really stands out, right? Boom, boom, boom. Ah, this is it. Perfect, right? So this is our displacement leg. Remember, like we were doing with our trading ranges, right? Price expands higher. Remember what we're doing. We've now closed above this. We've violated this bearish fair value gap, making it a inverse fair value gap. Now we're looking at this to offer support. We have the breakaway here. We're still in our green premium discount, still favoring longs. Price retraces into our bullish order block here. That's where we can take our entries, right? It would be right on the top of that, yeah? We then put our stop loss here, a few points under the swing low. Oh, Craigie boy, my OCD's always all over the place, mate. You should see my charts. There's none of this stuff on them. But I do appreciate they make a decent, and just make it a bit more decent from a visual perspective for you guys. Well, hopefully, anyway. Either that, or it just looks like I'm just tossing around rainbow colours like some kind of kid in kindergarten. But does that make sense, guys? Let's zoom out again to just get our high time frame perspective. All of this has just been purely framed, right, by the fact that we've taken our external liquidity from this high, retraced to internal, failed to take external again, took external from the lows, traded it up into here, got our short bias, traded it lower, violated this here, and then we're talking about taking external liquidity over here, all right? So what about that is unclear. Or actually, there is two things that I want to finish on, actually. One, I want to show Ryan very quickly. Just take a look at this. Okay, so in terms of this, and I know as Harm said in the chat as well, Ryan, this is all recorded, mate, and it's all available for free. You can go onto YouTube and watch this back from the start if it is of interest for you. Or I kind of go over this in a little bit more detail as well there, right? But let's just bring that in. This is the principle. External liquidity are our swing highs and our swing lows, right? If we see it, no, Erica, they bloody not. They've removed the opportunity for me as well. I don't know why. We have professional membership, everything for YouTube, and they will only let us at the moment go in 720. No idea why, but hopefully our tech guys are working on that. Apologies if the quality is a bit poor. So once we take external liquidity, yeah, so let's imagine we've got an old high over here, yeah, that's taken. We then look for price to rebalance internal liquidity, which is our fair value gaps, yeah. Then we expand higher here. What happens? We take external liquidity. We expect internal liquidity. Price does come down, so it affords us some nice shorting opportunities to here, but this ultimately fails. So when that fails to support price, our expectation is it's reaching for external liquidity lower, yeah? Then when we take this external liquidity here, it's then drawing up into internal liquidity, for which we then hunt shorts back down to external liquidity, yeah? And that's what we've been looking at here, overlaid onto a chart, right? So external liquidity in the form of these beautiful equal highs here is run, yeah? And this is actually, we're looking at this on a weekly scale, right? So that's why these highs might look a little bit off. So let me pop that back onto a weekly for you, mate, so it doesn't become any more convoluted than needs be. So let's see if we can squeeze these both on. We can. So external liquidity in the form of these untapped highs, that's taken, yeah? And the expectation then is for this fair value gap, which is created after the close of this candle, which this one just taps into, in which case it's then searching for a higher price, which we have to look for historically. If not, it makes a new higher, then it's taken this high. So our expectation again is for price to draw down and take internal liquidity, right? Now, once we're in here, we can then overlay our principles of premium and discount, in which case we want to be shorting until we get down into here, right? Until we draw down back into discount, yeah? So short favored, short favored, shorts favored, shorts favored, shorts favored. We're now down, right, in our internal liquidity target, meaning that we are now favoring long setups because we're down in the green up to this external liquidity. Take external, down to internal. Now we failed here, right? We failed here. We expect external to be taken down below. All right. I think I probably do explain that a bit better at the beginning of the video, but I'm going to go over this over our next few sessions. All right. Let me just have a real quick look at some of the questions. Ryan, you're very welcome. Just look at Peppy 2 right now. Stefan, thank you for the heads up. Just absolutely mooning, is it? Yeah, a lot of these low caps are just going to ping, ping, ping and go nuts. OCD is definitely being tested today, Craig. Yeah, it is shame on them. You're right, Erica. They really should pull their finger out, really, shouldn't they? And whack, got a nip. I'll put the kids to bed. Awesome. Yeah, good night, my friend. Wax, a very long-term friend of the nest and of the stream. Always appreciate your patronage, guys, as I do all of you who tune in and listen to me ramble on about this on a weekly basis. But is this making more sense, guys, right? Because there's one little thing I just want to finish up with you before we go. So just think of it a lot more simply than I'm sure I'm putting this across, which is if we've attacked an old high, yeah, or an old low, then we expect it to retrace to its nearest fair value gap or order block that's in premium discount, right? So what I'm going to do is I'm going to run through this really quickly, and then I just want to show you one other thing, which I certainly find interesting anyway, which is what happens if price is running really strong. So on a weekly scale, let me show you why I flipped bullish, or what certainly confirmed my bullishness was, like I said to you here, right? First of all, we've taken external liquidity. Super important. Yeah. So now we're expecting this to be rebalanced, right? Price comes up and rebalances this where? Within our premium discount range. So we see the red up here. Yeah. So that, can you all see how that wick just sneaks in? Yeah. Sneaky wick just popping in. Where do we expect it to take out? Liquidity at the lows, yeah? Up, down, out. So now we're there, however. Why was I bullish from here? Anybody guess why I started getting bullish here? Let me just get rid of that a second. The close of that candle, so from this day here. The reason is because we've closed above. So my expectation now is for price to chase this down. So let me show you what that looks like as we decant this lower. I put the arrow there just to show you we've got that. Now, our bias is bullish on a weekly scale from there, our bias has been bullish on a daily scale a long way before, right? So let me just get rid of this for a second just to clear this up. So let's look at this, right? What have we got? Price comes into this. Forgive the crude drawings, guys, but I'm just going to do it for speed. Yeah. So price takes out liquidity above the high, sells off. Takes key liquidity there. We expect to retrace into this fair value gap. We get that. Now we expect price to reject here and search for external liquidity again, right? Which are these equal lows here, right? Relative equal lows. 1, 2, 3. What happens? Price gets taken out there. We expect price to come in and rebalance our fair value gap, which is our internal liquidity, right? So we can see how we have this beautiful synergy of price taking out lows, attacking highs, rebalancing inefficiencies, taking out highs, yeah, price comes back down, searching for our fair value gaps or our order blocks, yeah? So we get this nice movement. However, what does happen with price, as we see here, price just rips up and through this. So let's just draw a really quick line here, right? We had this big expansive move here where our expectations for price to come down and rebalance this, which it doesn't do. So from here, we have to say to ourselves, we're in a really, really bullish mode of price delivery, right? So for here, what do? What I do is this. I go down onto a lower time frame. For me, I really love using the 5 minute. Those longs. Thank you for those that sacrificed me. For every buyer, there's a seller. For every seller, there's a buyer. All we can do is try and put ourselves, in terms of returns. And it's nothing to do with winning and losing, but everything to do with making sure that you're profitable, right? So let's just quickly scooch back. Bear with me a second, because like Hans said, you start getting on the lower time frames here at the moment on TradingView, and it is a little bit twitchy. So on the chart, I have 3 trading sessions set up, right? So what I want to do here is just compress this down, and we're just going to look, make sure we get our green arrow. Here we go, right? So green arrow, we can all agree, and I will keep this short, guys. I know we've run kind of like an hour and 10 already, but let me just do this because a lot of people ask me this question. I've got my high time frame bias, right? My high time frame bias is completely set. Now, I specialize in trading the New York AM session and New York PM session, right? So for me, that's here, yeah, right? 1330 till 40 till 1600, right? That's the New York AM, and then the PM session, which is 1830 through to 2100, 9 PM. So this is really, really simple. I need to see a sweep of liquidity within one of these trading sessions, and then a market structure shift with displacement for entry, right? I'm only looking for long setups. Yeah, only looking for longs. So what do we have here? We have a sweep on liquidity, right? Whether it's this low, right? The low above it. What else have we got for confluence? Well, okay, so we are drawing down into this order block, which we expect to support price, right? As we said, we expect the down close candles to support price. What's happened? We've got a bullish bias. We're within our New York trading session. What do I need to see? I need to see a move higher, which is our market structure shift. And you can mark these up. Just once you do, you can save them on here as well, and it just helps if you move through. So MSS, market structure shift. Now, when I say I want to see a move with displacement, what do I mean? That means that I want to see a high energy move that leaves fair value gaps. See this? Fair value gap here, fair value gap here, right? So where am I looking to enter? Well, I can either take my premium discount, or I can look for the nearest PD array, yeah, which is this fair value gap here, which is also overlaid by this order block. So here's my entry. How have I done this with the most simple set of rules? Where am I targeting? Well, quite honestly, this is the London session, right? So London higher. Why London higher? because it's key liquidity. Yeah. So these boxes here denote different trading sessions. New York, you can see a very light grey one there. You might not be able to pick it up, which is here. So I'm looking for sweeps of liquidity, because if I'm in a trending environment like this, I know that price is just ripping, right? So I'm going to trade this until I'm wrong, right? So that's what this looks like. I'm simply looking for a liquidity purge. Yeah. Comes down here, engages the sell stops, allows larger accounts to fill their buy orders. We're waiting for the market to have a shift in structure, showing us displacement, which are these fair value gaps, showing us that there's energy in the market, there's buyers stepping in, right? And all we then need to do is manage our risk. So that's where we're a buyer. So we need to know, if I put my stop loss underneath here, I always go a few points underneath it, right? Do I have enough to get myself to London high? I want it to be around about 1.5 R. Perfect. Because when I get to London high here, I'm moving my stops to entry. All right. Because I'll be looking for secondary targets, obviously further back. But I want this to be in and around it's about 1.4 R, right? Now, what you can do ultimately is we're saying that if these down close candles are protecting price shouldn't close below. The fact that we've got a little fair value gap underneath here, yeah, adds a little bit of extra weight to this for me. But what I will often do is move the stop loss to the bottom of the body of the candles. Why? Because if this fails, this fair value gap also fails, the chances are that I'm wrong. Okay. However, what I would always recommend when you're testing this, be consistent, make sure you're consistent, but also, typically these key swing lows and swing highs are your best for placement, right? So where are we now? So we now step into the New York PM session. So does everybody remember the set of rules? Very, very simply, we need to see sell stops engaged. We've got a bullish bias, so we need to see a low swept, right? We then need to see a market structure shift. Do we see displacement? We absolutely do. We have this beautiful array here. We have this fair value gap. Do that in green to show that that's bullish as well. Because remember, that was an order block. This is an FVG. You could have had several entries here. There's your fair value gap. Here is your breaker candle, which is the last up candle before price got sent down. I do them orange. Yeah. Now, people will say, yeah, but you cherry pick, you blah, blah. Well, not really, because I've got a fair value gap here and I've got a breaker. The fact that they overlay, that's always going to be my entry, right? Down here, I've got the order block. The fair value gap's a bit higher. So I favored the order block because it's closer and it's further down towards discount. Yeah. So remember, if we want to overlay our premium discount ranges, we want to make sure that the arrays that we're taking are down as close towards, in this case, discount as possible. So see this, just down in discount. You can put a stricter set of parameters on yourself that you wouldn't enter unless it comes right down. However, I always find with crypto, it's quite difficult because crypto can run obviously incredibly volatile, right? So does that make sense? So here we're a buyer, right? We've got no fair value gap in down here. So I'm happy to take that low because this order block here should be defending price, as should this fair value gap and the breaker. And then I'm just zooming out and I'm looking left and I'm saying, okay, see this big thick line here? That's a high time frame level. So we will trade first of all to that as our first target, and then look to put our stop loss to entry to manage our risk, right? So I've still got a bullish bias here. So what am I looking for? We just missed this in the New York session. See, we get a sweep of some lows, but we don't get the expansion. Then we come outside of our session here. No displacement. So then we move to here and we say, okay, do we get anything in the New York PM session? We sweep a low. Yeah, no, you're absolutely right. King Swan. It is always a lot easier to trade these charts with the power of hindsight, but also for education purposes, you have to show people how price action plays out like this, right? I'd be more than happy to share with you my current thoughts on it, which I'll do in a moment. But as we can see here, price purges the low. We then look for a high to be taken out with displacement. And what we can see here is we have this fair value gap down here. Entry, stops under here, targets higher up, okay? So what we have here from King Swan. So it's absolutely right. It's much easier to say this stuff when the charts are printed, but from an educational standpoint, it also makes a lot of sense, right? Because in terms of that, it's what you've got to look for. So, like I said earlier, I don't know if you were on the stream earlier, King Swan, but we're in a strong bullish bias at the moment, right? From a technical perspective, I would like to see price pulling back down towards this because we've taken out this key higher, right? However, when we get in these high momentum moves, we want to zoom out. No, not at all, mate. Really appreciate you asking the question and doing so in a decent way as well. I know there's a lot of people that shill stuff and don't actually really want to offer any real value. And you are absolutely right. It is a lot easier to do these things with a chart in front of you. So I'm just overlaying the same principles again, right? So I'm looking at this because I've not got the clearest read on a daily because it's just up, up, up. I'm zooming out and I'm saying, okay, well, where's my dealing range here? So we've taken this high and we've taken these lows, yeah? So for me, this move down is one move, right? So what I'm going to do is I'm going to take the lows to that higher. And now I'm overlaying this. What I'm saying is, okay, well, where's price engaging with? So what we can see at the moment is that price is engaging with this weekly bearish FVG, right? So while we've got that, I'm just going to draw that in red and then just get rid of this. Then I'm showing caution here, right? Because we're in a bullish state of delivery, which is fine, but we are engaging with a premium discount bearish array, right? So if I see a weekly close, right, and this is talking about this on a weekly scale, right? If I see a weekly close above here, yeah, so violating this, making that inverse, then I'm starting to look for targets on the next key swing highs because my theory then is that price is then moving for external liquidity, right? Now, as I drop this down onto an actionable time frame, because I have a bullish bias, let me just get rid of this for a moment. I've dropped this onto an hourly time frame. Then, like I said earlier, at the moment, so if we take a key level like we did here, we took the prior day's high. That's why I was looking to go short. Yeah, Sunday. I didn't take the trade because I don't trade weekends, right? But that's the theory here. We're overextended, looking for a pullback. If we do the same thing and overlay our premium discount range here as well from this low, which took swept that up to this high, yeah, we can see where we can target areas, either order blocks or fair value gaps that sit within, right? So we can draw that across to here. There's our order block. That was price moving higher. Now today, we've got a lot of bullish momentum, right? If you wanted to go long today, London was the session to do that because once we've interacted with that order block, that's where we're running higher. Right now, on an hourly scale, yeah, we've run this higher. So for me, once again, I'd be looking at this displacement leg here, yeah, to denote the fact that we've drawn down into this area. Now, the issue is here on an hourly scale is that we don't have an array here, right? We don't have an order block. We don't have a fair value gap for price to draw into. So while my expectation is for price to push higher, where we've taken out the prior day's high, at the moment, this isn't within the risk parameters that I would want to trade. HM, you beauty. How the devil are you? Thank you, Hans. Yeah, absolutely. It's BC_Richfield, guys. You reach out to me on Twitter and there's some information about the Nest, which is my trading community down in the description, or our trading community. It's a group of traders started by Crypto Burb. Yeah, easier to cheapen them account as they see. Yeah, not ones they need to imagine. Yeah, no, it's absolutely right. It's one of those things. It's finding a balance between education and I try really not to kind of say to people, look, follow this, do that. It's more of kind of looking into my trading journey, the way that I've kind of pieced it together. And hopefully there's kind of some areas there that you guys can learn from. But I really appreciate your point, King Swan, which is it's a lot easier to do this with a chart in front of you. But looking at it the other way, looking at live trades is very, very different, right? And putting those setups and calling those things in real time, which is what we do at the Nest. So if it is something you're interested in, you go and grab yourself a free trial. We do trading calls go out every day. All of the traders have all of their portfolios, all of their trades and everything is shared live. And Wednesday as well, we kind of look at a few more live setups as well. I just realised how long this stream has rattled on for. But as you were coming into London today, this would have been the setup you would have been looking for, right? If we hadn't got it in London, yeah, then we would have been searching for that same setup in New York. Yeah. So here in New York, I'm not going to fade this strength, but where we've run this higher, the prior day's higher, my assumption here is saying, okay, well, are we just correcting down into here? We've taken external liquidity right here and here. So again, overlaying the same principles, just make this a little bit thinner, right? We're in here, yeah. So we need to remember in our high time frame bearish PD array. Now we've taken external liquidity here, right? We took external liquidity here. We violated this fair value gap, making it an inverse fair value gap. And we also created this bearish fair value gap here. So because we don't want to fade such strength, right? What I'd be saying here is I would want to see something from price here to show me that these are being respected. Now, if price rejects here, yeah, and fails to close back above here, if it closes back above here, the expectation is it's reaching for this higher. Now, the lower the time frame that you push it, the trickier that it is to have the conviction, right? But we can see the momentum price is building. If we fail to close, yeah, and we come back down here, then on a structure shift, draw that properly, right? That's where you can get involved in being a seller, right? We would look for this move down with displacement, yeah, a structured move, look for the fair value gap that's in here. We know where our risk is above here, and we would simply be looking to scalp this down to these targets, all right? I would also be doing so with a reduced position size, right? Meaning that if my normal position size is 1%, I'd be reducing that down to 0.5, right? Because I'm going against the main trend. Now, what's interesting here is we can see that we've closed above this. So we're back above this inverse fair value gap. That should have been acting as resistance, yeah? We also have this bearish fair value gap here, right? Which should be acting as resistance. Now we've closed above that, yeah? We want to now move this to an inverse, right? Meaning that my expectation now is for this to build a little bit of momentum and start attacking these highs. If I wanted to then give myself a little bit more, yeah, then our rule is that our expectation is always that the down close candles are going to defend price. So if these are our down close candles here, in form of our order block, what we're saying is we want to see this area hold. If we see this area hold, we can wait for a sweep, an aggressive move higher, in which case I think we're going to start attacking these highs up here. If, and again, you don't want to follow this on a 1 minute, remember, our order blocks, our fair value gaps in this particular instance have been based on a 5 minute. So don't wait for a 1 minute close. You still need to wait for a 5, yeah, to just respect those. Guys, look, I know I've really been rambling on for this a while, but Julian, thank you for the feedback, mate. HM, brilliant to see you on here, mate. HM's a wonderful little trader, another guy from the UK as well. Also knows a little bit about medicine. For me, BTC is just traded into a monthly, weekly FVG to go lower. Exactly what we were just talking about, mate. HM, a very, very good student and long-time member of the Nest. Also a bright little bastard as well. Still not interested in crypto, at least for another 6 months or so. Interesting. Yeah, so a little bit like myself at the moment, I think the risk is very much to the upside. We enjoy the ramblings. Good. It's also GOT as well. Thank you for the feedback. Erica, need to run. Look forward to seeing you Wednesday. Apologies, this was such a long one, guys. We'll try and kind of cap them down in future. Let me know what you kind of feel about that. King Swan, I'm really glad it helps between different timescales to see the bigger picture and time framed out. Really, really appreciate you being part of the stream today, mate. And also for asking a really, really good question. Always welcome on that front. Hope to see you again too. So let's see how this plays out, right? At the moment, we've closed above here. We're pulling down into here. This should be offering support now, right? If we start to break back down below this, it's a sign of weakness, in my opinion, in which case I would be looking for something like this to play out, yeah, and to be chasing this lower. But I'm going to pop a few things on here. I'll pop a couple of updates on Twitter today as well, guys, if you're around. So please do come and check me out if you are on there, BC_Richfield. All right. Look, thanks so much for your patience today, guys. I know it's been a really long one. Hopefully there's been some alpha in there for you. If you've got any questions, please do stay in touch. You can reach out to me on Twitter or obviously through the Nest as well. And yeah, I'm going to be back on Wednesday. Where we look at our altcoin, but also look at equity markets as well. Let me know your thoughts on this and how they play out. And also remember to trade safe, keep one eye on the news as well. At the moment, there's a lot of very news driven in the markets. And just trade safe. Don't feel like you have to throw money at the markets. Think of profit and building wealth as a byproduct of successful trading, right? Focus on education. And by all means, please do reach out with any questions you've got. All right, guys, have a fantastic week ahead. I look forward to seeing you all around the nest.